I'm going to feature a bull 3x technology that has taken off. And I'm also going to feature that bull is coming up to some major resistance levels on a weekly chart. I'm going to feature the fact that you're there at this top. Here's another one. There's that other top. Here's the crown of the top of the 2011 reversal. This is what had led the bear down, was tech to the weekly support levels. But that was in 2011. And that the broader trend channels, there are different various trend channels. However, you can see here where they pop that weekly buy signal here. And in the short term, you're at about, on a weekly, you're at a 1.9. The problem is with it is that it's hit a major wall up here. Now this bull 3x can be shorted just like a stock. You don't just have to go long. You will learn here that you can short these bulls, but you don't short bulls unless they've made extreme tops. So the thing about the bull needs to pull back. We're going to be looking at various different management on it. That's what it looks like on a weekly level. When you take a look at it on the daily Friday reversal here, you made that top. This is what I'm talking about. And you pull back, and now and this is going to be the shorter term support level on the daily now. But on the daily chart, this thing hit 96.67%. That's why you got the reversal. That's why it's good to short these things that have gone parabolically up, because when they hit the shorter term level on a daily that overbought, you're coming down. It's still overbought, but it's technically considered a reversal to a bull pullback here. When it pulls back, it's still in a bull trend now. Don't get me wrong. Let's take a look at the bear side of it. This is called a bear 3x. At the right time, we'll be looking at overnight positions that when the tech has to pull back, that bear got so deflated, and still is. It got down here to 2.80. Now it's at 6, but it's oversold, meaning that you can't have a one-way market, and you won't. It'll take some time. So you can see where the bear was in this whole process, and this is this whole channel of the bear of 2012 right over here in the video, right up here. So we're going to look at the bear and the bull, because if I'm shorting this up here and it had a $2 drop, then I'd be buying here, and I would buy long, so that when the short is working, this invertly goes up in value. So they're both working. We'll be monitoring it in this new 2012 bull trend. The bear side of the market is totally, when you look at bull and bear side, you've got totally an overvalued tech here and an undervalued bear tech here. I will conclude it that we move forward and we learn how to put together the fact that the technology area using ETFs, bulls and bears, is it's time to start looking at if the bull comes up and hits the higher, lower, so it looks like this. Right here. We come up, we make a half, this daily half bar, last peak of the high. If we can't close above half of the bar, now you'll know that in your own trading platform, that's 52.76. So that thing comes up here, hits it. It's going to have to pull back here and test daily moving averages. Here's where the gap of it was, at 49. So yeah, there's yield here. You know, you get 1,000 share short up here, MMTJ, and hold it until it tests here. You'll make some pretty good money overnight. So that's the gap right there. That's that support level from this gap that happened on 2-2. and that if it does come down, it's going to test that 10-day moving average and either bounce at the time or if it sells through it, here's where its real support level will be, is the 20-day simple. Right here where that red line is, that's the 20-day. So we're going to be monitoring how to short that. Another one that we're going to throw in here that goes with it is shorting the bull and holding it overnight. Not because the bull is a bull, but every bull rally like this that goes parabolically up to 97%, I mean, give me a break, folks. That means one thing. There becomes a time that the bull has to ring the cash register and take profits. This, unlike the other one I just showed you, that bull had gap down, and this is that this bull is not nearly as overbought, but because of Friday's reversal off of that high was 97 and the low was 93. Shorting I can get you permission to short that bull. You get 1,000 shares short up here in these extreme peaks, you're going to make some money. The gap support is going to be right around $91 and some change. Any upside movement to resistance is that the price exhaustion will be looking for this area at 96 to hold at resistance. That's this area right here. If we do break above it, each higher high will have an immediate reversal. This is the TQQ ProShares Ultra Bull, and it's performed really good over the daily. So unlike its co-partner, the bear, that's the SQQ. And running a balanced overbought and oversold portfolio is the following. I short the bull. This is finally where that bear got down to $13.60. The SQQQ is the opposite end of the TQQ. And there are other instruments that can be used. This one doesn't move a lot, but over time, in a correction, and you get the bottom down here on 1,000 or a couple thousand shares, and you're selling back at 16 at resistance up here, that's pretty good money. And at the very same time, and we have lots of videos on bears and bulls from 2011 and 2010 that MMTs can go back to and look at, and trades that we've done, and we've done them always the same, and we always know that on a daily level, I lost the chart, hold on, that on the daily level you can't go that overbought, you have to come down. It's where we look at getting easy money. Yes, it was a great rally up to the top, just like Google was a great rally up to 670 and had to come down. But just like anything that have great rallies, great bull rallies do have to pull back. So we're going to fade the pullback at resistance levels, and we got everything going in our favor here on this bull short.